The rupee has seen a recovery coming in today after those 10-week lows that we saw onto the currency. On your screens, nearly a percentage point of gain coming in before the currency shut shop at around 62.51 there. Well, let's get on board then. Mr. A.V. Rajwade, he's Director, A.V. Rajwade and Company. Also joining us on the show is Vijay Bhamwani, who's author and CEO at BSPL India. Mr. Rajwade, hi to you first. And the RBI policy, there were a couple of surprises. The repo rate hike for sure. Not many people were really expecting that. What's your sense, reading and reaction to that?
Well, nor was I really expecting a hike. So, in a way, it was a surprise. And I think markets always react to surprises rather than when the news is as expected. So, yes, it was a surprise to me. I was not expecting that rise. Coming to the exchange market, I don't think that has had any direct impact, because if anything, that should make the stock market indices and prices sort of more vulnerable. Globally, rising interest rates are a bear signal for stock prices. So I don't think there is any direct correlation. But could be that behind the scenes, RBI has taken some measures, maybe intervening in the market directly, or perhaps some form of support for oil companies' dollar purchases. One doesn't really know. But I imagine that some such steps by the central bank were probably at the back of the rise of the rupee, which also occurred later in the day.
Mr. Rajwade, that's about the RBI meeting, and that really is out of the way now. What we are looking at, the emerging market sell-off for the last couple of days, that seems to have stabilized right now. But with the Fed meeting now coming in and markets expecting perhaps yet another tapering number to come in, do you think we might really be looking at that happening all over yet again?
Not really. But the fact remains that many emerging economies which have large deficits on their current account and therefore need continued capital inflows, whether of a short-term character or investment capital or whatever nature, when countries become over-dependent on capital inflows, I think the vulnerability to what happens to interest rates in the US does go up. And I think if you have noticed, for once, to my mind, the markets have behaved reacted in a rational fashion. Most of the emerging market currencies which have come under pressure have been of those countries which have large deficits, whether we are talking of Brazil or Turkey or the Indian rupee or the South African rand or the currencies also of South American countries.
Clearly that. And the kind of decline that the rupee has taken, we seem to be just about holding that 63, Mr. Rajwade. So what's your sense then going forward? Are we looking at more depreciation coming in for the Indian currency?
Well, I think the downward pressure will persist. It is obvious that while for a while the rupee remained reasonably stable, one doesn't know how much because of behind the scenes direct or indirect interventions by the central bank, how much because of the demand supply pressures in the market. So I think what's likely to happen in my view is that RBI support in one form or another would be needed if the rupee is to stabilize. Otherwise the downward pressure might resume once again. May not be in as volatile a fashion as it did, about 6 months back, but yes, I think in general, that is the kind of scenario I'm looking at.
Vijay, getting you in the conversation, and let's read on the charts really, because we've seen more than 0.25% gain coming in for the US dollar ahead of the FOMC meeting. And the kind of turnaround that we saw in the Indian rupee today, how is it looking on the charts?
Technically speaking, Manisha, it looks more of a corrective move than a complete trend reversal. I think the rupee's taken a breather. And as I talked about in the last couple of weeks, 63.25 is the level I would keep watching out for on the USD INR spot. For the USD to start appreciating significantly, it has to close above the 63.25. And in the futures market, of course, that 25-13.5 paisa premium to cash always remains. I'm sorry. So once you see a close above 63.25 in the cash segment with higher volumes and the market men showing signs of exuberance by raising the open interest in the prompt month future series, I think the dollar will start resuming its upward trajectory all over again. The scope for appreciation in the rupee remains limited both in terms of time and in terms of price. In terms of price, I think 61.80 is now a base for the USD to get support at. I don't see a decline below that in the absolute near term. And on the upside, like I mentioned, once it crosses 63.25, on a closing basis, that too with higher volumes and open interest expansion, I think it's headed towards the 64.5 level.
Let's also get on board Michael Hewson. He's market analyst at CMC Markets, and he joins us on the show to discuss currencies as well. Michael, hi. The emerging market currencies saw a sell-off. The emerging markets as a whole actually have seen a sell-off on Friday and Monday as well. Weak Chinese data, expectation that more could be heard from Fed on tapering. What's your view on how the market is factoring all of this?
Wheels from emerging markets that there are concerns about inflationary effects because of weakening currencies. This isn't really a surprise. I think the real concerns are obviously if emerging market central banks lose control of the decline in their currencies, but even of themselves, it doesn't necessarily have to be a bad thing.
Michael, what's your sense really on the US Fed tapering, on the quantum of it and period as well?
Well, I think the expectation this week is we're going to get $10 billion of tapering. I think you also have to look at it in the context of how the new FOMC voting members are made up. They're going to be slightly more hawkish because Mr. Fisher and Mr. Plosser, who have both been dissenters to the quantitative easing program, are now both voting members. Given the volatility that we're seeing in emerging markets at the moment, there could be a case for maybe doing a slightly smaller taper. But overall, I still think the direction of travel is a slightly slower.
Fair point, Michael. Also then, where do you see the Indian rupee headed with that kind of a background and what's happening with the emerging markets? Do you see Indian rupee also getting under pressure?
Currently we're below the levels that we saw in November, around about 63.90. I think as long as we don't break above 64 in dollar terms, then I still think that the Indian rupee should remain fairly well supported. If we go above 64, then obviously there is a concern that we could go back to the levels that we saw in the middle of last year. But overall, I remain fairly constructive on it.
All right, so 64 perhaps could be holding some kind of resistance there in case of the rupee. Mr. Rajwade, what's your final word really ahead of the FOMC meeting? What should the markets be really watching out for now?
Well, I think in terms of the dollar rupee, what they need to watch is what kind of measures, if any, the RBI takes, either directly or indirectly, in order to support the currency. I mean, I hope they do not really support it at the current level, because given the inflation differentials, I think in the interest of growth and in the interest of creation of employment, I think the rupee does need to fall so as our manufacturing sector becomes more competitive in the global markets.
All right, so that's the view really coming in for the currency market. We've had a whirlwind of a day today when it comes to the Indian rupee, but there is more happening in sense of events in this week itself. So that is something to watch out for. But with that, Mr. Rajwade and Michael Hewson, thank you so much for joining us and breaking us what you expect of the Fed meeting there.